Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 272 for August 3rd, 2020. We are recording this live at 1 p.m. Eastern Time. And my name is David Cosbetter. I'm the creator of TimingResearch.com. And today we're going to be discussing the S&P 500 and other markets that we're watching. So today I've arranged for Neil Batho, Michael Filighera, and the option professor to be here. And the option professor will be moderating again today. So I'm going to go ahead and turn it over to him.
Okay, thanks, David. And I think we're off to a pretty big start this week, and I think it could be a very exciting week by the end of the week. So I'd be very good to hear what you guys have got to say about things. With regards to introductions, Michael, do you want to start out a little bit about yourself, and then, of course, a little bit about what your company's doing?
Sure. Good morning or good afternoon, depending on where you are. My name is Michael Filighera. I am the proprietor owner of logicalsignals.com. That is my website. Currently, I am providing market updates on trading futures and day trading every day. So if you want to check in and get your name on my list so that you can also receive them, that would be great. I have been trading in the market since 1979. I've been a market maker on the options floor here in San Francisco, also on the London traded options market, and on the European options exchange in Amsterdam, and also on the DTB in Germany. And then I came back to San Francisco, where I still reside and still analyze and still trade, but now I'm just a day trader.
Okay, sounds great. And at the end of the broadcast, if you have some good offers, you'll mention it at that time. Neil, for people who are not familiar, quick background on yourself and, of course, what you guys are doing at your company.
Sure. Thanks for having me on the show again.
You bet.
I used to be a broker at a big firm, and I realized it was just a sales job. I have a lot of funny stories, but they bring you in a lot of good food, and then they try to get you to push mutual fund companies that bought you lunch that day. So there really is no such thing as a free lunch, but I got lots of them anyway. And after that, did some business consulting, and then I started my company where I use some of the charting that I actually learned as a broker, which is point and figure charting. And then I combine it with the Ichimoku cloud. And I specialize in trend trading with absolute precision entry points. So if I want to buy something, I want it to move right away. And sometimes I'll watch something for months and just waiting for the right signal and the right time to get in. And then oftentimes when we get in, we'll get a move that is so fast that we actually don't end up holding that long. We might only hold for a couple weeks if we're holding a leveraged ETF. But I'm always looking for the great entry point.
The leverage ETFs, are they like the ProShares and Direxion and those kind of things?
Yeah, absolutely. So unfortunately, the triple leveraged on gold and silver are gone now. You can just do double leverage unless there's something that I missed. So we did those on silver 3 times this year. And I just discovered some 4 times leverage ones for currencies. So they're popping up all the time, but you got to look at the volume, of course, and the bid and ask, because some of these new ones have really extremely low volume, which means the bid and ask might be a bit off.
Why did they get rid of the ones? So was there a reason behind that? Or?
It's the strangest thing. I don't know why. I think it was Direxion, which is owned by, I think, a bank.
Okay.
And I was reading about it, and literally no one knew. So my guess is that maybe they had some sort of
internal problem.
Yeah, internal regulatory people saying we don't want this thing to blow up like that VIX fiasco a couple years ago.
Exactly, because they had to get rid of that VIX thing because that blew up pretty hard. Yeah.
So I don't know.
All right, well, let's start out with our basic question we have on Mondays, which is where do you guys think the market's going to go between now and Friday? We opened at 32.88, so you got a head start to the upside. But Michael, how do you feel between now and Friday? We're gonna go.
Between now and Friday, I will go into more detail later, but I think we'll be lower. And at this stage, I cannot give it more than a 50% probability.
Okay. Sounds great. So lower and about 50-50. With regards to Neil, we again entered at 32.88. And What do you think is going to happen between now and Friday?
I'm going to go up with
Mhm.
about 75 to 80% probability.
Yeah, you like that? We went up to that 3,300 mark, and that was kind of a big mark because there was a gap there from when we dropped down. So it was interesting to see that get filled up today. Well, let's talk.
Yeah. Oh, well, I'll talk about the reasons later. Okay.
Yeah, let's start out with Michael and give some background on what your gut is telling you regarding between now and Friday, and possibly a little slippage between now and then.
Sure. I am a great follower of Elliott Wave, and I also use Fibonacci numbers. And one thing that I've kind of been noticing is that the S&P continues to creep higher, and then today making an additional new high for this particular sequence, not an all-time new high, which is still about 100 points above us, above like closer to 3,400. The market seems to be running out of gas. I think that the earnings reports that are going to be majorly pushing a market higher have already been released. I think what the market is riding on today is that Microsoft is up very strongly, and as a heavier weighted stock in the S&P and also in the Dow, it's continuing to provide a lot of uplift to us. But it tends to be on a little bit lower volume. One thing that I did notice this morning is that as sellers were coming in to the markets, they were being absorbed. So that tells me there's still a lot of buying interest today. And again, being the first day of the month of August, first trading day for August, we likely might see additional new money coming in towards the end of the day. But I think that we're getting a little bit overbought, and that a pullback will come in, and it might wait till midweek, but I think we should start and then end up a little bit lower. I'm not saying that we're going to collapse. I'm not saying that we're going to go down real far. I'm just saying I think we will be lower than where we opened today.
Yeah, the interesting thing on Microsoft is that their cloud business, the growth is slowing quite a bit, just like AWS was at Amazon.
Yeah, exactly.
But this TikTok thing, I guess, have people excited. You know, it's funny.
Yeah, it does.
They don't like TikTok, but if Microsoft wants to buy them, they like them. They don't like Huawei, but Qualcomm just struck a big deal with Huawei. So I mean, it's hard to figure out, who's
It's
serious.
hard to figure out, what do you want?
Yeah, exactly. Who's serious? Who's not? Hey, Neil, what are you looking at behind the curtain? It's going to give us a little bit of a up move this week.
Well, part of my trading is based on one major indicator called the bullish percent index. And what that will do is it goes from 0 to 100, and it will tell you what percent of stocks in the S&P 500 are on near-term buy signals. And that almost reversed 6% last week. And what I've noticed the last couple of weeks is that weak holders have kind of been shaken out. And it looks like the moves have been too big for it to just be the market makers doing this. But it really looks like people have been shaken out. And now we kind of have these new buyers coming in. And that's one of the reasons why I think stocks are going to move up.
Yeah, people are becoming more and more comfortable with coming back into the market. Huh?
Well, I just remember a trading phrase, and I've got a list of about 10 of them. And one of them is that trends can go longer, and no, trends can go further and last longer than anyone ever thinks possible.
Yeah, yeah.
You know, so if you remember back in 2000, I mean, I remember that so well with the internet stocks. And I was a broker in 98, 99, and then internet stocks were popular, and we had some guy selling them like crazy, you know, and he got a new, bigger office, and I don't know what ended up happening to him, but a lot of
Probably
people
got wiped out.
I think he did. Yeah, he probably did. You know, I knew a guy who was buying them on the dip. So God, did he get crushed. But the thing is, a lot of people say, oh, buying internet stocks in the tech, you know, rally was stupid. And I say, it's not stupid. It was only stupid to not sell at the peak and keep buying on the way down. You know, you could have got 300, 400, 500, 600% gains. And if the trend is going, just don't question it. You know?
Yeah, no, there's no evidence of a turn.
Stay on the train as long as you can. You
Yeah.
know, and if you see if you see the bridge ahead is out and you see it well ahead, well, keep riding on the train and get out while it's still safe before it goes off the bridge. You know, so that's kind of philosophy.
Yeah, no, makes sense. Now let's talk about some of the indicators. Michael, you were using indicators, Fibonacci and other factors, Elliott wave.
Mhm.
Could you expound on, what are those indicators saying as far as, that kind of thing? And do you look at the advanced decline line? Because I understand that the advanced decline line has not been really confirming this rally very much.
It hasn't been confirming. And so I do look at it, but it's not as much as I did years ago.
Mm-hmm.
I'm more consistent with Fibonacci. And so I'm running Fibonacci. Again, I'm just a real high level view. Being that I'm a day trader, my long-term chart for use in a day trade is the daily chart. So I start with my daily and I run my fibs and then I work it down lower all the way to a 1 minute chart. So when I start to see on my daily chart that the market's getting overbought and we're starting to reach levels that, I have always kept room open and continue to say that the S&P and the Dow should move to new all-time highs. Then they just start to peter out and they just lose all their steam, but yet these stocks continue to pump and go higher. So what I'm seeing is just more sellers coming in as these markets tick up to levels that are moving things higher. That I'm finding that there are more sellers. Like I said, today is one of the first days that I've seen, particularly in the S&P and in the NASDAQ and in crude oil, actually, where every time the deltas would change on a sell down, they were getting totally absorbed and so the prices were not moving as you would think with the number of sellers that were coming into the market. Now I'm seeing that same thing in the S&P today. But again, it could be on the basis that everyone's looking at Microsoft. Is the TikTok going to go through, et cetera, et cetera. So I try to put that outside and look purely on a technical basis. And on that technical basis, it continues to tell me we are overbought here. We could go overbought more. We could stay overbought. But on a daily level, it's pretty consistent that we will pull back. And so as I start to work my way lower, it continues to tell me the same thing in that we may go up and go above 93.50, which in the S&P is today's high. But I don't see us picking up enough steam to really begin to push and just keep pushing.
Mm-hmm. And on your cyclical thing, we had heard from somebody a week or so ago on the cycles and everything, and he was kind of thinking that this week could be a cycle high point, and then we could see some kind of a sell-off going into October. And
I would agree with that very strongly. I would agree with that.
Yeah.
I've also done cycle work, but it tends to really become very confusing to a lot of people.
Yeah.
So, but I would
they do. We go in cycles because
that.
obviously the world is transitory. It's not going to buy all the time or sell all the time. So that's why the cycles can help you a little bit. But Neil, obviously the cycles are the cycles, and the real price is the real price, and the real prices have been going up. So obviously, a guy like you, what kind of indicators are you looking at, and when could they possibly turn sour?
Well, I've studied presidential election cycles. So everyone should write this down who's listening to this. It's the only trading book that I have. It's called the Stock Trader's Almanac. And it's just fantastic. Jeffrey Hirsch, I met him once in Las Vegas. He's a great guy. I think that his dad started the company way back. I mean, do you know when he started it? Maybe 50 years ago?
A long time.
Wow, is it incredible, the market cycles. And you know what? Everyone knows the market was great last year, right? Well, guess what the best year is of the presidential cycle? It's the third year of a new president's term. Boom. So there it was. And then the NASDAQ is the best in January. And so I actually didn't have the book last year. I had it several years ago, and I reordered it, and I'm sure glad I did. And I looked at it, thought, oh my God, it's just an incredible wealth of information in there. And so when you're looking at the charts and everything's looking good, and then you're in tune with what these cycles are, you can make a lot. And so in January, we bought the leveraged NASDAQ ETF, not the Dow, not the S&P 500, but the NASDAQ. And it just smoked to the other ETFs, you know. And off the top of my head, I think the second best year is the fourth year of a new president, but I'm not entirely sure. But I do know that in the last election, if the market rallies for 3 months before the election, then the incumbent has won over 80% of the time since the 50s or something like that. So if the market keeps rallying and copper keeps rallying, I would expect Trump to win the election.
Right.
You know, and the funny thing is the market completely predicted it last time.
Right.
Yeah.
Yeah,
so,
and like I say now, the comments are going the other way. So contrarian thought would be it goes the other way, but we'll have to see what goes on.
I mean, I just look at the cycles, you know.
Yeah.
So that's one of them. But I also know that in September, stocks often sell off.
Right.
August is usually slow.
Yeah.
But it's just like Homer Simpson said, you can prove anything with statistics. 80% of people know that. Right?
Yeah. Well, like I say, right now we're up around 3,300 on the S&P. The cycle guys are saying we could be at a high point and could roll over. You're obviously saying I'm from Missouri, I'm in the show me state, and the only thing I'm seeing is that the prices continue to rise. But are there price levels on the S&P, let's say, that would indicate to you that maybe you should be concerned about the cycle turning over?
No.
Not right now.
I'm not looking at a target on the S&P 500. I just want to mention, yesterday I also charted, instead of the S&P 500, ticker RSP, which is the equal weighted S&P 500. So you get a lot of the smaller companies will have as much weighting as Apple, you know.
Yeah.
And if the RSP is doing okay, then you know that the market's doing okay. So look at that one too, because then you're not going to be worrying. You know,
well, that one hasn't gone up to where it was in June.
No, but it's still hanging in there, right?
No, it's hanging in there for sure, no doubt about it. But like I say, it's actually a good little point on that. The concentration of rising stocks is a rather smaller universe compared to the broad-based thing.
And then it's also inflation, because you got I track the M2 money supply.
Oh yeah, it's gone through the roof. Yeah.
Dave, if you're able to get that up on the screen, I use an app called Trading View, and it's all free. It's just an awesome app. You can also get it on your desktop, and it has all these ticker symbols. But you track the M2 money supply, and basically, if the money supply is going up, market's going up.
Right.
And you can go back and you can look before market crashes, where you can see that the money supply isn't going up so much.
Yeah.
And you can actually look back at previous elections, and you can say, oh, look, the money supply wasn't going up. Oh, they lost the election. Yeah. It's hilarious. And then a funny thing, you can look back at the 2008 financial crisis, and you can see the bailout, because it comes up in the money supply.
Right.
And it looks like the tiniest little blip that you wouldn't even think twice about.
Well, this time it's a heck of a lot than a little blip, huh?
It's just massive.
Yeah. But again, 30 million people without work, and maybe 50 million if you counted everybody. That's a lot of people that don't have money coming in. And so
yeah, but I'm just saying that the money supply is going to add to inflation. Eventually, it's not going to. It's not right now, because prices go down due to competition and no one's in the hotels. But once the economy does come back, inflation's gonna just. I mean, for the U.S. skyrocketing, I would say it could be 10% in next year, the year after, 10% in 1 year, and then sneak up at around 7, 8. in 10 years, all prices going to be 50% higher.
Yeah.
So if all prices are going to be 50% higher in 10 years, the market's going to be 50% higher too. Everything's going to be up.
Oh,
you
yeah.
know?
Yeah.
So you
That's
might
the
as well buy
direction.
now.
That's definitely the direction of the long term. I guess the only question is are we going to get any respites in the middle? And with the equal weighted S&P not really confirming this big move, and then Michael's stuff on the cycles indicating, the advanced decline's not really confirming it. Not going in here like a crazy person and selling, but looking for any cracks that might indicate that late August, September, we could see a correction, because things are getting they're obviously they're doing very good right now. So there's a lot of people coming in.
Bull markets
Yeah.
climb a wall of worry, Jim.
Yeah. Yeah.
And what do bear markets do? I know you know it.
They just keep going.
They float down a river of hope.
Oh, okay. Now, I guess, like I say, if you're in the mega growth and if you're in the tech and the semis, those are three great places to be and have been since March. If you're in the other stuff, then obviously you're still waiting for the bouquet of roses to show up, because they really haven't done that yet.
Right.
Yeah. I'm just thinking of this right now. Caterpillar, we sold that 2 weeks ago. It wasn't doing much. I'm glad we did. It's down, I don't know, 8-10% maybe, but I wouldn't buy any big machinery equipment that gets exported.
Yeah.
Because
The
now we got this
industrials
China
are
problem.
having a hard day. The industrials are having a hard. Anything that's not tech,
Yeah.
is not having a great time of it, and that's why people are concerned that at some point we could have some kind of a rollover. Let's go over some specific stuff that you guys are that you're interested in. I know, Michael, you do a lot of work with S&P and the NASDAQ, of course, and then you also have some interest in the gold and silver. So let's cover some of the stuff that you're looking at and expound on your opinion.
Okay. Well, as you just said, I am a very big trader in gold. Actually, has been one of my primary markets for trading since about 1999. And I think last time when I was on with you, Jim, we were discussing gold, which was still sitting below the previous high, which was at 1923, 24.
Right.
And now it is cleanly broken above that. The one thing that I do want to state, which I feel that the equity markets tend not to focus on, the gold traders or the gold market cannot stand uncertainty. Uncertainty, just all cards are off the table, and they're going to push for what a lot of options market makers would say they want insurance. So in other words, it's like the premium's going to be higher to buy gold at that particular time, or any of the precious metals, particularly gold. And we've seen that. And yesterday in the Globex session, we saw it open and break firmly a high above the 2000 level. Now that's just a major level in the price of gold. It doesn't have any Fibonacci numbers. It doesn't have any Elliott numbers that kind of coincide with that. But it did break above, and now it has dropped back below. I still feel that gold has additional upside to go, but I become less interested on a long-term basis of trying to put my money there. And if you're looking for security, then I think that in a very long-term position, you would wait. I wouldn't necessarily go into gold. You might trade options, but I don't think I would go into start buying physical gold at this particular moment. I think that gold continues to have upside potential. I think eventually where this is going to end up is about 2,265. And that ought to provide a level where gold will turn strongly in the other direction and put in a more substantial correction. Now, what would add to we're having a little bit larger correction from current levels, you can see it's kind of come off. It's trading 1986. It's been lower today, but it continues to hold in these areas. It's because of the uncertainty. We have uncertainty politically. We have uncertainty, at least in the United States. We have uncertainty politically. We have uncertainty in terms of the pandemic. We have uncertainty in the markets. where is it irrational exuberance that's pushing the markets higher? Could be, who knows? Is it trading? You know, when we look at the specifics and why Apple continues to go up after its earnings, sure, it blew the doors off the earnings. But really, I think what people want now, I think we need to remember, one, it's the largest retail traded stock in history. It's right there in Apple. And so, you know, they come out with great earnings, and then right at their tagline at the very end of that report was, oh, by the way, we're doing a 4-for-1 stock split.
Right.
And boom,
Which people are front running.
just started to go again. And I'm like, oh, gee, thanks for that late notice, guys. And so I think that that's going to continue to hold people's interest for a while. And as we're seeing, you know, the stock's up another $11. It's been higher. It's been up, I think, closer to $20 already today. And that's just going to have to play out. But how it affects gold, I don't think it's going to have much. I think that the buy interest remains very strong in gold, even up at these levels. We're going to let it pull back, but yeah, it's going to go higher. And I think that the correlation between that and the market and that and the dollar is where it's really going to become more important to watch. As long as the dollar continues to weaken against the euro, gold sits at these higher levels because you've got all that interest outside this country in owning it.
Now, on a short-term basis, let me just ask you a quick question, because you know the euro did hit that 119, 120 area, which basically it was rejected from.
Right.
And the gold, some people were saying when you're above 2,000, that might be an area where it could get rejected in the short run as well. Do you think in the next month or two you could get a better opportunity, not only in the euro but in the gold?
Yes. I think the euro, it's pulling back after hitting, like you said, that higher level. But I think that we can go back and look at the mid. I'm on a very long-term chart. I'm on a monthly chart, and I think we have to go back to February of 2018, and I would suspect long-term we're going to break that high, which was 120, 126. And that, I think if that occurs, we'll reach up to that 20, what did I say, 22.65 level. So yes, I do think there is that play, and I do think that it does continue. I think that the dollar will continue to weaken. And again, this is a long-term process. So if you're going to build a position on that level, you have to keep that in mind. And you've got to be able to sit out and be able to trade the short-term variables, or the short-term variations that are going to happen. Markets do not just go in one direction. So we have to be prepared on what we want to do when we have a little bit bigger of a pullback. How do you want to trade that? Or when the rally is going further than we think, how do you want to trade that? So, but for right now, I would say, yeah, I think the euro, it's just in a pullback.
And on the silver, how's your feeling on silver?
I feel sorry for silver. Silver's almost like the bastard stepchild, you know. It put in a seriously strong move last month. And now again, like gold, is beginning to pull back, as one would suspect. I think if silver continues to hold well above, like I think this pullback might bring it back to, you know, maybe 22, could be as low as 20. But depends on what your term is. So again, I want to say, if you're a short-term basis, you're going to look for this thing to drop back down to maybe 23.50. 23.50. If it breaks below that level, then I'm going to become more of a serious seller, looking for a move back down towards 22. In the meantime, I think that we really could pull back to 22, where I become a stronger buyer, and then I'll be looking for this thing to just rocket again.
So basically, you're not against the idea that we could see a pullback in the metals, but that pullback would be a good opportunity.
I do, and well, let me just include in the discussion. This is all based on information that we have today, information that the metals do not like uncertainty. They don't like it economically. They don't like it politically. They don't, you know, when there's a threat to that calm, and when there's a threat to the status quo, let's say, then you're going to see the metals jump into action. Similar to what we see in the bond market.
Right.
When there's a threat to the uncertainty level of disrupting the economic cycle, people are going to go, well, I'm pulling my money out of there and I'm putting my money in bonds because government bonds are quote unquote security. It's the same thing in the metals. If they're sniffing that there's too much uncertainty and they're not getting their answers to make that uncertainty resolve itself or just to go away, then we're going to get the pullbacks, but you're going to see the buy interest and the sell interest are not equal. There's going to be greater interest in buying it. And I think buyers that are smart, when they see a bunch of sellers coming in, it's like, sure, I'll participate, but they're going to let them sell it down, right? And, and then jump in. So I think, yes, they'll all continue to play. It just depends on your time frame of how you're trading and what your objectives are.
Right. Hey, Neil, some of the markets that you're kind of focused on, you know, because you seem to be, you know, have a wide lens. So, you know, you're not really locked into any certain sectors or indexes or whatever. So what's on your menu lately?
Yeah, I definitely like to trade everything if I can. But I definitely agree with Michael about the heavy metals. You know, I saw gold hit the futures at $2,002 last night, and I thought, who are these people buying at 2,000? Where were they at 1,800 and
1,300?
You know who? You know what I mean? So,
oh yeah, believe me, I know.
Trading is a little bit like in poker, where there's some expression where you're playing poker and you don't know who the sucker is at the table. It's probably you.
Yeah.
And you should just go home, you know? So, but I think silver will eventually have more room to go, obviously. But, you know, I think of holding a gold coin in my hand. I just can't picture it going much above 2,000, but I could picture silver hitting the low 30s at least in the near term future. But if Ocasio-Cortez is the vice presidential nominee, you better hit that silver button immediately as fast as you can get to your laptop, because you know, one of my philosophies is that, you know, the price of gold and silver goes up in anticipation of an increase in the money supply through deficit spending, right? And it's based in US dollars, right? So, you know, we had these big COVID bailouts, and, you know, that made the dollar go up, made gold go up. But no, I would avoid it for the time being. Could be months until we buy again. And then I also look at bonds as well. And bonds, you know, they had that huge 20% rally, and they're still hanging out at the 20% rally area, even though stocks came back. So, you know, I keep looking at bonds every day, and I keep thinking, is this really going to break out and make another huge move? And I think I just don't see it, but maybe, you know, I just don't think people have guts to do it.
Can I ask a question, Neil?
Yeah.
I don't disagree with what you're saying, but in terms of, if you see that the buying in the stock market is kind of almost like Pavlov's dogs a little bit to me, but in the precious metals and in the bond market, if you see that they've gone up into that 20% up range and they are not coming back down, but yet the stock market continues to rally and the dollar evens itself out, does that not send you a message saying that, well, they're still not secure and that all is well? Does that make sense?
Yeah, it's just a tough one. I mean,
it is. You're right.
There's a lot. I know there's a lot of managers out there. I mean, they'll try to get you in, you know, 60% stocks, 40% bonds, and I think there may have been a lot of this redistribution going on, which sort of created this equilibrium in bonds. You know, and I think they just might hang out there for a really long time. It's tough to say, for months. You know, but bonds are fantastic for trading if you can get them.
I will. Yeah, they are, and I'll tell you.
I love it. We've done options on bonds. I mean, we made over 100% in January buying calls on bonds when the market crashed. We didn't even short the market. We just bought bonds. I could wish I shorted the market, of course, but I mean, we still did well. But
I will pay attention to the bonds on the basis that if they start to make some moves against what's actually happening, then they're sniffing out that there's a possibility of a rate increase. Well, right now that possibility or the probabilities are very, very low. But then we also know that the Fed is not going to go negative unless they're absolutely forced, and I don't see that happening. So we're at the base of where I think rates can go. So I think that people are willing to come in and go ahead and do their trades here. Might not be the smartest decision in the world, but they're feeling secure or more secure in putting all their money in a bond that's going to deliver, coupon once a quarter or once a year or whatever the rate is, instead of trying to put it in the equity market or even the precious metals markets.
Yeah. But the bond traders are definitely the ones that are sniffing out trouble before it all happens.
Just like gold. That's what I keep an eye on both.
I mean, I look at bonds every day. I look at the 30-year.
Yeah.
And look at the yield curve. I have all the yields listed, and I look to see if the yield curve is inverting, and it seems okay. But
Right.
I saw bonds starting to rally 2 weeks before the crash of this year, somewhere around middle of January. I thought, this is a little peculiar. Why are bonds going up? People don't like stocks,
Right.
and if you want to trade, you got to look at bonds every day.
And I will tell you, it's like, that's a very good point that you just made, but I would also go back and just put side by side a gold chart at that bond from January, because I think you'll see that they kind of started together.
Yeah.
And that's that whole uncertainty thing that I was just speaking about.
Yeah.
They feel it, they see it, or whatever. Like you said, they smell it. And that's why I pay very close attention to both of those.
Yeah, absolutely.
What about the fact that GDX hit that 45, 46 area, wants no part of it? Is that telling us a little bit that the gold market temporarily could have a sell-off because the gold stock players are saying we've had enough right now?
It could be. It could be, but I think a lot of times it's like we got to go back to, GDX is the miners. These are the miners. And I think that when we start to see the miners rally, the gold really has to go much higher than it is going. Simply because if we go and we look at each one of the miners, what is their break even? So how much is it costing them to get that ounce of gold out of the ground? And that's why I think for me, trading GDX really becomes more difficult because I'm grounded more in the fundamental of what makes that stock tick. So I tend not to go to the GDX if I'm seeing a kick butt rally in gold. I stay away from the mining stocks. Yes, they should participate, but only if it's going well above their price per ounce of pulling mining the gold itself.
Well, I mean, I'm looking at GDX and it tripled in price. So it certainly wasn't a bad place to be.
Oh,
but
absolutely.
The other thing is the last time gold was at 1900, GDX was trading as high as almost 70, 65. So
Right.
I've always had a hard time, figuring out why GDX would be trading at a 40% discount to where it was last time gold was up here.
Right.
And I also obviously am saying to myself, the run to 45 looks like for temporary anyway.
Well, I think you have to say also, Jim, it's like it has done an awesome rally off of those March lows at 16.
Yeah. But it's nowhere near where it was last time
Right.
we were at 1900. So I always felt like somebody's wrong here. Either A, these stocks should be much higher, or B, this gold rally is temporary in nature or something like that. But something should give, something should give, you know what I mean?
Right. It's not a bad thought. It depends on, again, then I think, just look at what their break even is per ounce to get it out of the ground and then compare that to the gold price. And you could be absolutely right. Gold is moving faster than they are.
Totally is. Yeah.
Their feeling is like, well, I'm not going to get all excited here because gold can easily slip back $100.
That's the thing. I think maybe it might be discussing the sustainability of the advance, because if you
Yeah.
are going to be at 2,000 or better for the next 2 or 3 years, then these mining shares should be flying through the roof.
Agreed.
If the 2,000 number is going to turn into a 1,600 number in the next 90 days, then obviously there's a reason why the stocks aren't going up.
And if
I
you have
think
a probability on that, that's going to help. I think that would really be your deciding factor as to what do I want to do here in GDX.
Yeah.
I think that's a great analogy. Just put some
It's a
probability.
caution flag, it's a caution flag because
Yeah.
again, things that don't make sense don't last. And it doesn't
Right.
make sense to me to be at 42 when the last time you're almost at 70 and you're actually $100 or so higher, little less, whatever, than you were the last time we were up here.
I'm
So
going to have to try to remember what the calls were back when gold. I think if you remember back then, silver was also trading at 48.
right. Well, to be honest with you, that's why I thought silver was a bargain as soon as it broke above 19 and it spiked up to 26 before you could spell silver. So that was a pretty good deal. But again, that 26 area also has not exactly been held very well. So, it's never one thing with any of this stuff.
To the adage that, perception is not always reality.
Yeah. So anyway, Neil, anything else specifically that you're looking at? Have you looked at Nokia or Ericsson? A bar was on TV talking about how they may be able to have some technology to compete with Huawei or something like that. And the next thing I knew, they both were moving pretty good. Do you look at anything like Ericsson, ERIC, or NOK?
I haven't, but that sounds like a good idea, because Huawei is obviously out, and it's going to be out of England too. Canada's next, so I guess we'll be looking to see who makes that infrastructure. That'll be some good plays. Normally, I don't do a bottom fish like that, so they've been off my radar for a long time.
Yeah, especially the Nokia. It's gone from 4 to 5, which is certainly not a bad move. What about Teva Pharmaceutical, TEVA? That's another one that's getting some legs, and that's in distributing generic drugs, I guess.
No, I haven't looked at that. I normally just trade the leveraged ETF.
Oh, okay, I got you.
LABU for biotech.
Okay.
But that unfortunately escaped us and has been escaping us for a
With
long.
regards to Teva, I would also just keep an eye on, of course, the big thing with the vaccine, which is now expected, towards the end of this year, maybe into the start of 2021. How quickly it can get into the hands of a company like Teva to start producing the generic, quote unquote, brand. I don't know.
Isn't the pandemic going to be basically over by the time the vaccine comes out anyway?
No, absolutely not.
No?
No.
How come?
Well, because we in this country have absolutely.
Neil, you're not wearing a mask, are you?
Actually, I'm in one of the best places for the virus, which is that's great for me.
So you don't wear a mask.
Yeah, I don't. I hear you. No, I don't think that it's no.
Okay.
I would not
There
say
was
that.
a 1957 similar situation. And,
No similar situation except 1918. To be honest with you, Neil.
No, there was one in the 57, I believe. Everyone
Was it polio, right?
forgot about it, but one of my readers wrote to me about it.
A flu pandemic.
Yeah.
So on that biotech you were talking about, LABU, it did have a huge rally up, and now it's had a pullback. Went all the way up to 75, pulled back to 50. Do you think it might be able to get back on the bicycle down here, or is it just off your radar?
It's off my radar right now, yeah.
It's up 11% today, so that's not a bad move.
I've got a few picks that I'm holding. I think that a big trend for the next several years is going to be security, for your car, for your house.
Oh, okay.
ADT was up 60-something% today because Google is investing in ADT, and ADT is the biggest home alarm system, because you got anarchists all over the country trying to burn the country down. So
that's right.
Probably going to want to get an alarm system on your house.
And connect it to your phone and all that.
Fairly basic, fundamental analysis, I would say. I think that's definitely a big trend. Security for your house, for your phone, for your kids.
Yeah.
People will probably start tracking their kids.
Start putting chips in their hands.
Well, if
Who
we have
knows?
30 million people without a job, there'll be a lot of people roaming around looking for something to do, right?
I
Hopefully,
saw the other day that there's a dedicated cybersecurity ETF. Yeah.
Oh, really?
HACK.
Okay. I
Yeah.
didn't know that.
Yeah. Cyber,
HACK.
CIBR, and hack, HACK, yeah.
Okay.
Oh yeah, there's a couple.
CIBR is not a bad one either. Yeah, so ADT was just almost like Kodak, just floating around, not doing much, huh?
Yeah.
And all of a sudden they got a knock at the door, and it was Tim Cook.
Yeah. So.
We also had a question from the live audience, Daniel, the live audience, about solar stocks. What do you guys think of solar stocks? Looks like there's the ETF for that. Tam? You
I
guys have any
actually
thought
think
of something?
solar is going to go, but I'm not sure I want to buy any of the stocks.
I don't know. My limited knowledge on the solar is that when you pencil it out without government credits, the math doesn't add up quite as good. But that was a while ago. Things are always changing in that industry, so I'm not current on exactly what's going on. But this thing's moving pretty good. Obviously, it's gone from 25 to 45. So that speaks for itself. Michael, on the NASDAQ, obviously we're running up here again. I think we just made all-time highs again today.
We did.
And so do you look at RSI and see if there's any divergence?
I do.
Anything, one thing that I was looking at is the NASDAQ versus the volatility of the NASDAQ. I think it's VXN versus NDX. And the disparity between the volatility and the price is extremely wide. And historically, sometimes that comes in. So the way it would come in, volatility would pick up in the NASDAQ and the prices may come down, or a little combination of both.
I think it's going to be the first part. I think that volatility is going to increase and catch up, but the market is going to come down. I have my next level for the NASDAQ is actually way up. It's 11,705. And so, somebody said, do I really think it could go there? It's like, well, I didn't think it could go to 11,000, but
Right.
Here we are.
Right.
So I don't ever discount Fibonacci levels, and that is a Fibonacci level up there. I do see that the market is extremely overbought. Even, I'm going all the way up to weekly and the monthly charts. And so a larger pullback, I think, is in store, and I actually think it will take down pretty much everybody. Interesting to note, one of the larger components of the NASDAQ 100 is, of course, Apple, and then Amazon, but then also Microsoft. So right now it is getting upside support from Apple and Microsoft, but Amazon has stopped going up, and they blew the doors off of their earnings report. And then so the stock responded, but the stock did not move to new all-time highs on that time. In fact, they began to sell it off. And so that's when I think that the reality begins to set back in terms of the trends that seem to be put in place with the fact that we're sitting, a lot of cities are still under stay at home. A lot of people are working from home. So I can understand that a trend to go in, it's like, well, you got to keep up your home offices. So you're going to buy Apple products. You can't go out to the store. So you're going to go to Amazon to have everything delivered. So I think that, yes, but Amazon also has great services in the web services, as you spoke. Yes, it's gone down a little bit, but still, those are all in place. I think that they've just stuck, I think it's $10 billion in with SpaceX, because they're just going to put their own satellites up there. And their infrastructure is investing a great deal into being their own delivery service, not having to count on the United States Postal Service or FedEx or UPS. So I think that the stock is going to react, but I think it's still a very good long-term investment. But I don't think that Amazon, Apple, and Microsoft can support an entire economy.
Could it be a situation where we had a very strong May and June, where people came out of their situation and really spent money, and then
Right.
in July it started to lose all that momentum, and it's
Yeah.
possible in August here we may lose that momentum even further, and that might be the catalyst for the correction. Is just that the big boom that came out of May and June has now turned into a fizzle in July and August.
Right. And I think, I keep repeating myself, and I don't mean to do that, but that level of uncertainty.
Hmm.
And I think you might find this interesting, Jim, because you and I both follow volatility.
Mm-hmm.
You would think with the Dow up 222 and the NASDAQ up and the S&P up, and volatility is down 17 cents.
Yeah. Yeah, the thing is with the NASDAQ, it's so strong and the volatility still is, in that 24, 25 area. If you got the VIX above 28 and you got the NASDAQ under 10,500, that might be a better time to consider any type of sales strategies.
Right. I'm with you, and I'm glad you said that, because that's what I was just going to say.
Like anything else, you'd like to have a little company on your idea, not just no one.
Well,
and you might have some momentum when and if we can get under 10.7 and
Right.
then 10.5 with cause. With cause that can sometimes get because people are looking for an unwind trade, and it's not here yet. But the unwind trade would be, lightening up on tech, semis, and mega growth, and starting to maybe pick up things like the value ones that are trading at peanuts, and the relationship between value and growth is the widest since .com. So
yeah, I'm a little bit of a different type of trader, but I understand.
That's more investing. That's more investing. Yeah. What do you think of that, Neil? Because you have been around for a long time. You understand the difference between value and growth. Is there an unwind trade in our future at any point, or what do you think?
Well, sometimes growth stocks can become value stocks. I remember Cisco became a value stock for a while. It was in value ETFs until it became not a good value anymore, But I have two ETFs on my list. One is growth, one is value, and I look at them every day and I see how they're working, one against another. And, it just may not be time yet, but you definitely have to keep it on your list, and when you see something go to the absolute mega extreme on growth, then I think it would be a good time to switch to value. But I also wanted to mention to everyone that, don't count out housing.
No.
Because, you had the 30-year go below 3%.
Right.
The Fed will not raise rates at all this year or next year. I mean, I can't believe Powell shows his cards like that. I think it's a bad move, on his part. People loved it when Greenspan would put everyone to sleep for an hour and then they just go back to trading, Now I saw Powell on TV with all these people, talking heads. He was taking questions from the public. I thought to myself, I just don't know if that's a great idea. But don't count out housing, because there's always people out there with money that you don't know. They're the ones that can keep the housing market going, and people are going to want to move further out into the suburbs. I mean, that's what I think. You take the center of every protest and you figure, okay, how far do these guys want to walk? 5 miles, 6, 8 miles? Okay, I'll just move 10 miles away from the epicenter of where these protests are, and then I'll be safe, Or
that's definitely the dynamic, Neil. That's definitely the dynamic, because New York City real estate's having a rough time, and the suburbs around New York City are flying. So, That's it. Hey, listen, we're coming up to the top of the hour. Let's go over again about who you are and your website and special offers or any kind of offers you want to give out. Let's start out with Michael here. And again, just a quick review of yourself and the website. And then again, how can people get a hold of you and what do you have that you'd like them to take advantage of?
Again, Michael Filighera. I am the owner and proprietor for logicalsignals.com. If you would like to get a hold of me, please send an email to michael@logicalsignals.com. I always respond. I don't think there are any stupid questions, so please ask what you will. And I, again, am just re-engaging and starting more like a daily blog, but it is also market analysis, and it's geared towards day traders. So if you're, and day traders and futures. So I give big picture down to little picture and to a daily down to a minute. And so yes, please go to my website, get your name on my mailing list, and you will receive all that information for free.
Sounds great. And Neil?
Sure, you could sign up on my website, and I give away a lot of good free commentary a couple times a week on the big picture. So even if people who signed up for free, I warned them of the crash in January, I actually said to even sell your 401k for the first time in 10 years. So I give away a lot of big themes and whether I think we should be in and out and what I'm looking at in that commentary. And if you like my commentary, then you can sign up and I give the exact picks of what to do in your account.
Sounds great. And take advantage of that and get a hold of these guys so they can show you what they could do for you. Option Professor does have a weekly market update that we bring out. And we've been pretty fortunate in March to get involved with the tech and the mega growth. And in April and May, getting into the epicenter stocks, and then of course in June and July being involved in the gold, silver, and copper. So there's a lot to learn at the on the weekly updates. So just go to optionprofessor.com, put your email in, and you'll be in the queue to get the free update next week. Back to you, David, and again, Neil and Michael. Thanks a lot for being here. I think we had a pretty good talk today.
Thank you.
Thanks again.
We also have a special event coming up on Wednesday that's going through all-day series of lectures about Fibonacci and Elliott wave. And Michael and the Option Professor will both be doing presentations for that. Do you guys want to take a minute or so just to mention anything on that topic that you're going to be talking about on Wednesday?
Sure, I can. Again, I'm very excited about participating in this particular webinar. And I'm going to be talking about Elliott wave and Fibonacci as it relates to day trading.
Okay. And I'll be trying to go over things with regards to the Fibonacci's and the waves, and also using certain moving averages on different time zones to try to give you an idea of some of the things and some of the opinions and observations that I have and where they come from. So you get a little bit of behind the scenes on my process.
All right, sounds good. Thanks, guys. So yeah, you can always go to TimingResearch.com/live to access any of the live events, including Wednesday. So that's going to be from 10 a.m. Eastern Time all the way until 10 p.m. So it's full 12 hours of presentations. That's several, brand new first-time guests are going to be involved with that, and a lot of good returning guests, and so that should be a pretty exciting event. And then all of those presentations will be archived and available on Timing Research as soon as I can get the archives posted after the presentations. So you can also be sure to subscribe to Timing Research on YouTube and your favorite podcast directory to get updates there as well. And then, of course, for today's shows as well, I'll get the archive posted on Timing Research as soon as possible after we're done here. So I just want to thank my guests again for today. Neil Batho of TraderReview.net, Michael Filighera of LogicalSignals.com, and the Option Professor from OptionProfessor.com. Thanks, everyone.
Thank
Thanks,
you.
David.
Thanks, David.